this is John Kvale, and this is our audio review of our Q4 newsletter. So here we go. I want to try and, there's a lot of material to cover, so I wanted to go ahead and get going. The first article is an article on inheritance, which we did a post on mid-month, and it was just fantastic. It was one of the most popular posts that we had of the year, and so we went ahead and added to it. What's interesting about this inheritance article are these stats. These stats are just stunning. It is on several different studies, I found out that 70% of the wealth is lost before it gets to the second generation, and 90% is lost by the time it gets to the third generation. Wow. So I dug a little deeper. I'm going to move down to page 2 for more of this article. And it was very interesting just to find out and kind of dig a little bit more. And here's some of this is really neat in that this is what the estimate, this is a Accenture and Kvale Associates study. This is the wealth that's going to transfer over the next years, and I mentioned it in the article. So why is this going to happen? Well, the baby boomers are getting older, and the next generation has accumulated a lot of wealth, and it's going to go down to the next generation. Now, more importantly, why are these prior statistics so miserable? I think I mentioned a couple things here. So planning mistakes. There's going to be some planning mistakes. The great buy it now, pay later. We all know how that works. Keeping up with the Joneses, I call. And then I wanted to visit even further and say, well, okay, here's essentially this is a chart that talks about this reflects student debt, and I'm okay with that. I understand that there's student debt, and I actually think that that's a good. Investing in ourselves is an excellent debt to have, not like some other debts. So I go down here, and I wanted to finish this and say, what's the solution? If we go back to the prior page, my last point, I really think that the solution to this is just understanding that it happens. And clearly, if myself and other people are doing their job, this won't continue to occur because planners will help to plan people for long periods of time. I think that it self-corrects itself. If you see this statistic and you understand that it can happen, then you're going to try and stay away from it. Okay, let's go back to page 1. That's where it all starts happening. All right, I have an energy and oil and energy friend or foe. And essentially what I wanted to do here, and this was an article that was missed in the last newsletter, but I went ahead and put it in here. So we're going to move over onto page 4. This is oil. Whew, it's bounced, and now it's even moved up a little bit more. But the main point that I wanted to bring, these are earnings estimates for the energy sector for the remainder of this year. Look at this, down 60%. You go, oh, well, shoot, no one in their right mind would own oil or any oil investments. Well, let's think about this. Okay, here's a neat little chart that shows that energy stocks are at their worst since going back to 2000, and we've had oil a lot lower than that. What I also talk about right here is look at what happens next year. Now, this may change. The earnings numbers may come down, but it looks like energy is going to be the best earnings number for the year looking into next year. This is according to FactSet. All right, well, clearly they're coming off of a low base when we go here. Well, they all did really bad. They had big losses, but don't be too shy. We always say never go all in. And the reason that we say never go all in or all out, we say both, is because you never know when things are going to change. I'm going to move on. I'm going to skip right on down to the market update, and we'll mention the other article on the front page. Here we go over the market. We had a mini flash crash in early, about a month ago, and I go in to talk about that. I worry a little bit about people are being they're being trained like Pavlov's dog just to ignore this and just buy the dips, and it works until it doesn't. Here's a couple things that are on our radar. This is the advanced decline line, and this as this goes down and the markets continue to go up, that means less and less, there's less girth of participation. This is actually the Standard & Poor's through the end of the month, and we do see this correction. We didn't just bounce right back. We came back here. Now, as of today, the markets have started moving back up. That's fine. That's good. This is just things that are on our warning list. Now, here is something that's very interesting. I've talked about this before, that the Dow Jones transportation averages peaked back here in December, and they've continued to go down. Now, that would jive with what we have less participation. Then I also talk about the utility average. Yeah, utilities are an older average and they're not as relevant as they used to be, but they also peaked in January, February. Why is this important? Well, in a good market, as I mentioned, in a good market, healthy markets really move in tandem and late in the business cycle. We don't know how late. Are we in the 6th inning, the 5th inning, the 8th inning, the 9th inning? But late in the business cycle, these things start to happen. So wanted to also mention that just in closing, this year we've got our, I'm going to have to move this down because I can't get it. Here we go. Our 20th anniversary, 20 years we've been doing our holiday party, and it's going to be at the Flight Museum a couple of weeks earlier. And then I mentioned here to talk about basically the end of the quarter hiccup. And this clue, I'll shoot right back over to here. Here's our party date. Here's Thanksgiving and Christmas. But I'm going to go back to page 1 and talk about the clue. This is our wonderful credit.com article that was printed and picked up in multiple different nationwide companies, nationwide publications. So I'll let you read that on your own. We've talked about it several times, but I wanted to put it in here. And that is your review. I'm going to move this up for our Q4 2015 newsletter. Hope you enjoyed. Thank you so much.